Learning the lingo. You've got to talk the talk before you walk the walk. So I just want to explain some of the acronyms and terms that you'll use when you get involved in the cryptocurrency community. There's quite a lot of acronyms, quite a lot of terms that are specific to either share dealing or the crypto community. And until you understand what they are, you'll be reading blog posts and stuff like that and just get very confused. You'll spend half your time on Googling what these acronyms and terms mean. So I'm just going to describe some of the most popular ones here so you've got a head start. So we've got ATH, which means it's all-time high. So it's the highest price that a coin has ever been in its history. So it's the one time, if you're trading in cryptocurrencies, you want to buy low and sell high. So this is the time you don't want to buy a coin during the all-time high, but you might want to sell it if you can identify that point. So we've got bear markets. They are general downward price movements in a market. And we've got bull markets, which are upward price movements in a market. We've also got DYOR, and you'll hear this quite a lot. I'll probably mention it later on in these lectures. It's when people talk about cryptocurrencies, a bit like myself, but you don't want to actually give investment advice, because in such a volatile market, if you're not qualified to give investment advice, you want to end by saying DYOR. Basically means do your own research before you invest in any specific coins or take on any specific strategy. Just do your own research, because it's all down to the individual what suits them and what they want to do with their investing or day trading. So we've got the dump, which is a mass sell-off of a coin. Usually reduces the price. It can reduce the price dramatically if everybody dumps the coin, sells off at the same time. We've got fiat, which is, I don't know whether that's an acronym or not, I don't think it is, but what it means, I mentioned it in an earlier lecture, maybe I should have explained it first. It just means traditional money such as US dollars, pounds or euros. FOMO can be a bad thing. It means fear of missing out. So it's when you buy in all different coins based on rumours and you don't want to miss out on anything, so that you end up buying loads and loads of stuff just not to miss out on a bull run, which is an upward price movement potentially. So we've got FUD, which you'll hear quite a lot. This is basically anybody spreading negativity about the cryptocurrency situation at the time, maybe bad news or made up news. There's a lot of fake news in the cryptocurrency world to drive down prices so people can buy cheap. This is FUD, and it stands for fear, uncertainty and doubt. You'll have to try and identify what news is fake and what news is real. So this one's interesting. This is HODL, which means hold on to your coins. And you'll probably look at that and think, hang on, he's spelt that wrong. It should be hold. Well, actually, it is HODL. And the story behind this, I'm not entirely sure about the details, but there was some guy on a forum years ago. He was basically I think he was drunk at the time, and he was posting something about hold your coins. And because he was so drunk, he actually typed HODL. And this spelling mistake has just carried forward, and everybody calls it HODL now. You'll hear HODL more than you will hold when people are talking about holding onto your coins. And what this generally means, it means if you're not interested in day trading or buying and selling day to day, week to week, month to month, just do your own research on the coins that you're interested in. You think they've got a good product, a good service, a good team, a unique selling point. You buy them and you hold them through thick and through thin. So if prices plummet, you just hold on to them because you've got a long-term view and you're convinced that they're going to do well long-term. ICO, we talked about this earlier. This is initial coin offering. I'll briefly describe it again. It's when a brand new cryptocurrency comes out. There's an initial coin offering where you can buy the coin at a reduced rate before it hits the exchanges and other people are able to buy it. So you usually get a good price. Lambo. Now this means Lamborghini. In the early days when you could buy Bitcoin for something like 5 or 6 cents, certainly well less than $1. If you'd have bought Bitcoin back in 2010 maybe, then if you'd have hodled it and held on, each one of those would be worth today, I think $8,500. So those early investors held on for a long time through thick and through thin, and they did actually buy Lamborghinis with their profits. So this is where this Lambo comes in. In fact, in the forums you'll see when Lambo, when's it going to moon and Lambo? When are the prices going to skyrocket again? That's what they mean. So that brings us on to the moon term as well, which basically means a steep upward price movement. And to go along with the dump term we talked about earlier, where people sell off a coin, the pump is where people build up a coin's price. So you've got people who, a lot of influence in the market, will pump a coin. They'll say it's fantastic, buy it, it's got a massive future, and they'll build up the price of a coin, and then they'll sell it and they'll dump it. So the pump and dump technique is what people who have a lot of market influence will get involved in. They'll pump a coin up, pump the price up, buy it before they do that, obviously, and then sell it. So that's the dump. So you may remember this term from earlier. It's Satoshi's. It is named after Satoshi Nakamoto himself, the inventor of Bitcoin. And one Satoshi, it's a fraction of a Bitcoin. It's 1/100 millionth of a Bitcoin. So obviously Bitcoins are about $8,500 at the moment. I mean, but when you listen to this lecture, that price could be massively different. But obviously, with a price that high, we need to divide the coin up into much smaller parts to make it so we can buy and sell smaller amounts. And one Satoshi is 1/100 millionth of a Bitcoin. TA, you'll hear this quite a bit. This is technical analysis. And it's where we look at, and I'll do a lecture on this later on where I describe exactly what this means. But all it means is looking at the charts, the day-to-day prices or hour-to-hour, minute-to-minute prices of a specific coin, and looking at the charts, looking for trends and indicators as to whether the price is going to go up or go down. And finally, a whale. Now, a whale is a wealthy trader or a market influencer. Now, these guys are the people who have so much money that they can influence the market, and when they dump their coins, the price can plummet, and when they pump the coins, because of their market influence, the price can go up. So whales are considered to be quite bad for the market because they can influence the market. So I hope that gives you a little overview of some of the terms that you'll hear in the cryptocurrency community. And if you get involved in the community Facebook groups or whatever for a little while, you will hear every single one of these terms quite often.